The buzzword around the current investing climate in India is around two sectors, healthcare and telecom. We thought it's best to discuss telecom bareback about what are the current forces at play, how do the two eminent players stack up against each other, is there a room for the third player also to gain, and is there room for people to invest large fresh money into this pocket after the recent run up that we've seen in both Bharti as well as Reliance Industries. 1 month returns for Bharti Airtel are about 30%. 1 month returns for Reliance Industries are about 35%. Is there more in store? So let's discuss all of those aspects in this extended discussion with Rajiv Sharma of SBICap Securities, Head of Research there, joins us right now on the show. Rajiv, thanks so much for joining in. Excuse me if I've gotten the designation wrong. It's been a while that we've spoken, but good to have you, Rajiv, today.
Yeah, hi Neeraj. It's a pleasure to be here. You've got everything right. So that's great. Very good morning. Great time for the sector, and really the stocks have been doing well.
Yeah, so let's start off with what you believe is the current investing hypothesis, Rajiv. The hypothesis, I think, about 18 months ago was that from a multiplayer industry, it will trickle down to being a duopoly of sorts. Now, that may well be true, but now there are other facets being attached to it with people believing that the Facebook deal in some way is a clincher. Bharti could be in talks with somebody. How do you assess the current investing climate for these two, or business climate for these two?
Yeah, so the overall business climate is affected by the COVID thing for this sector as well, because a lot of demand comes from the enterprise MSME space. But keeping that aside, there are two parts to the telecom story. One is the telecom part, one is the option value part, which is around whether they can, move towards a trajectory to monetize the digital opportunities which are there. So on the telecom part, I think the story is still a market share gain story, because the third player, Vodafone Idea, is under pressure, and we still do not have clarity on APR payments. It's just delayed. It's not, vanished as a concern, as an issue for the sector. And the second part of the telecom story is the ARPU growth, which will play out over the next couple of quarters on the tariff hikes which were taken. So market share gains, consolidation towards a two big player and a third player, and tariffs moving from 170 with these tariff hikes gradually towards 200, 250. So that's the broader story for the sector. Now coming to the digital side of the story, Bharti has so far been focusing more as a pipe, and they have done a lot of things on the content side. They were doing something with the Kirana POS as well, but they, as of now, do not have a similar aspiration what Jio has demonstrated with the digital opportunities. Now, so far, it's a structuring, and they really do not have any revenues coming from the digital side. But the investments in Facebook, investments by Facebook and Silver Lake do suggest that there is a story which is being told to these strategic / financial investors that digital is a big opportunity, and there is a vision, and the whole Kirana, payments, content, and the telco piece are going to be weaved together around, that's the part of that vision, and that's what is going to drive the digital valuation, digital opportunities.
Have you tried to assess, Rajiv? I'm sure you have, but have you been able to meaningfully assess what kind of teeth does a strategic investor like Facebook add to Jio, both in terms of individual business expansion as well as in terms of adding repertoire which others may not have?
So there are a couple of things here. First of all, again, when you look at this Facebook Jio transaction, there are two parts to it. One is it's a pure investment in Jio, which is an unlisted telco, and one of the largest telcos globally, with what they have achieved in the last 4 years. And you and me cannot directly invest in just Jio, so there's a scarcity premium for it. And the catalyst which I talked about do play out for Jio. So that's the financial side of the investment. Second is they working together, they collaborating together on the payment side and the Kirana side, Kirana commerce. So e-commerce we've seen has got its own challenges in India, but the hyper local, the Kirana commerce is what Jio has been trying as a different way to achieve this e-commerce aspiration. And the retail grocery market is 65% of the 1 trillion Indian overall retail market. It's a big pie. Even if you make 1% of it annually, you're talking about $7-8 billion of revenue, which is equivalent to what you will be making in telecoms. So Facebook, when it comes in, it's the WhatsApp Pay. It's a WhatsApp platform of the Facebook, which can be the consumer interface, the Kirana interface, and it is the JioMart, which is likely to be the backend where Kiranas will be doing all their inventory management and managing their driving their consumers management system and all that. Now, Facebook will also significantly benefit with digital ads, which will go up because a lot of small businesses only want to target one area, which is, let's say, lower per age. They don't want to target all the other areas. And Facebook does a very good job in direct response advertising, which is very different from what he does a brand advertising. So Facebook is already gone with this investment. They're going to anyways make a lot of gains in this, irrespective whether this Kirana commerce really takes off or not. With this partnership with the telco, they stand to benefit a lot. So, and depending on how much the regulator allows both the companies to share data on the consumer side of the consumer insights. If that can be shared, then there can be more monetization, more cross-sell, upsell, which can happen from both the platforms. As we say, data is the new oil.
Sure. So, okay. So in which case, if Jio and Facebook together, excuse me, are trying to tackle this Kirana piece, Amazon has its that partnership with Future Group, and assuming that all stays well out there, has that talk there. Is Bharti left behind in that fashion on that particular piece? I'm just trying to ascertain what is that unique case now for Bharti to be able to score over Jio or come at par with Jio when it comes to the business metrics, Rajiv.
Sure. So let us, very interesting question, good that you asked. Let us take a step back. Will the Kirana play disturb or disrupt the Bharti's telecom in the next 5 years? The answer is no, because anyone who's on Bharti is on WhatsApp. Or most of them are on WhatsApp. So there is no direct disruption. Can there be a some kind of upselling, cross-selling that, okay, if you buy grocery from JioMart, then you will be given a 50 rupees, free recharge? That's possible. That even Future used to do. Big Bazaar, we used to get, top up time and all that. But that really may not disrupt the telecom piece of the story for Bharti. But what is going to really happen is that it is the Google, it is the FMCG giants who really need to think about a possible disruption. So Google, which 60-70% of their revenues is search, and those search may migrate to Facebook in terms of the the whole digital ad pie. So we all know that Amazon has a good amount of revenues coming from product search, which ideally should have gone to Google. Similarly, we may see that transition happening with this whole deal on the Facebook. So it is a likes of Google or Google particularly, which needs to worry a little bit, and the FMCG's giants. For example, think about the scenario that 2 to 3 million out of the possible 15 million Kiranas have been consolidated or aggregated by JioMart. Now JioMart has a good amount of bargaining power with the FMCG giants that we will they will have to pass higher discounts to JioMart, and these Kirana shops will be able to serve customers better, and that becomes a selling point. Then more and more Kiranas keep coming in. Oh, we'll get better rates and we will be more competitive, like the Zomato Gold. So it is. So now the question is, do you really need a telco in this piece? Yes, because the deploying of POS and aggregating kiranas, a telco can do very well. They have existing relationship, even the recharges which the kiranas do for them. So a possibility of a FMCG giant, some Google and a telco could be Bharti, could be Vodafone Idea, coming together and creating that kirana infrastructure and ensuring that Google also ensures in a way that the digital ads don't, evaporate for him after the Jio Facebook, thing takes off. That is the bigger picture, in my view. That is what we need to think of.
Okay. Rajiv, two very basic questions, and I hope viewers you can get it clearly. I think the sound is going on and off, but let's try and make the most of this. Unfortunately, can't do much about it. But Rajiv, I urge you to speak a bit louder if you can, one. And two,
Sure.
very basic questions. A lot of people kind of use fairly basic metrics right now when they're looking at both Jio and Bharti. They're looking at the last 1 quarter of data streaming and believing that even if 50% of the actual work from home numbers that we're talking about do indeed work from home, then data streaming could become a bigger reality than what it is right now. And eventually companies will take rates higher, and that's a clear uplift that they have. And we've not even gotten down to the voice tariffs increases thus far. At some point of time, those will too, and therefore Bharti and Jio both will benefit disproportionately. Is it as simple? At times people doubt simple. Is it as simple?
So it is as simple, but there's always a bucket which comes in. There is a user bucket. So for 60-70% of users, or revenues, this may be true, but there is a big chunk which is on the lower end, which is on feature phone, which is a 2G feature phone. For them, the whole smartphone transition has taken a step back. Today, if somebody has realized that I need a smartphone in this COVID world to survive, he cannot go and buy that. So till the time that smartphone sales are not allowed to happen and they don't pick up, telcos will be missing out on the opportunity. But the rest of the segment will be definitely, with a combination of tariff hike, they will be moving to higher data plans, because now they are consuming a lot more. So there will be a gradual movement. This may not have happened this quarter or next, because there is a thought process that this is just a temporary situation and some drug may come out and we'll all be back to work. And the work has started in some of the zones. But gradually, the data consumption at home has already picked up, and that's going to be, going to stay. And migration to upper plans will happen. But the guys who now want smartphone and are on feature phones, that segment wants to explode and accelerate to smartphones, possibly, whosoever can afford. But they will have to wait, and that's where there's not much growth will happen, and opportunity cost is also there. You are not going to make money till their time they move to smartphone. Gradually, that's a gradual phenomena. Every year we see people upgrading themselves to smartphone. That's not happening this anytime soon.
Okay. So Rajiv, let's put numbers now into perspective. Both these stocks are run up quite a bit. How do they stack up? If we look at Jio versus this thing, and therefore I'm trying to understand if, from a current investing perspective, which is a better investment? Are both good investment candidates? Can Vodafone also fit into the bill? What are your thoughts?
Taking the last one first, can Vodafone fit into the bill? As of now, it's tricky to say till the time we really have clarity on the AGR payments, whether they are spread over 15 years or whether they are happening right away. So if it's right away, then Vodafone may get referred to NCLT and you may see a shutdown. Now coming to between Bharti and Jio, so the narrative around the whole digital and the slash tech play has taken prominence in Jio. Definitely, there is a rights issue. So the stock may be sideways till the time the rights issue plays out and gets subscribed. But the deleveraging catalyst is very strong in the RIL stock, and medium to long term, this the stock has significant upside. Our target is somewhere around 1890. So that's the kind of upside we see from an 18-month perspective. And on Bharti, we still see a 10% upside, but we are not factoring immediate shutdown of Vodafone Idea, we are building for a very gradual decline in market share by Vodafone Idea, and let's say in 5-6 years we are building going to 15%. But if that gets accelerated, there could be another $40-50 at the least in the Bharti share price as well. We are talking about a 630-650 if that option was to play out. And if there is a narrative around a possible strategy which Bharti does, keeping what Jio is doing on the tech side and keeping that others will be interested to patch with Bharti and tie up with Bharti, the likes of Google or FMCG giants, then Bharti could also see a re-rating in terms of that tech angle, the tech narrative playing out.
Okay, Rajiv, what are the risks to this?
The risks, so risk in terms of Reliance is that, when this whole digitization of cable industry started, everybody wanted to go and buy LCOs, and many tried, and it was a chaos. Kiranas are similar. They are like that LCOs, last mile, distribution, and fragmented and not organized. So it's not easy to stitch that and get them digitized. Yes, there are some green shoots. There are guys who are getting digitized, but it's just the beginning of the beginning. It's long haul. So that's a risk that 12 months down the line or 18 months down the line, if things don't really move up, so that could be a risk from a Jio perspective. From a Bharti perspective, if Vodafone was to get some fresh funding, then the upsides could be relatively lesser in case of Bharti. So far as Vodafone continues with the tariff hike, that's fine. But if any of these players tries to do something with tariff, then yes, that's a big risk, which I don't see playing out, given cash is king for everyone.
I think I made a bit of a faux pas, but yeah, my mic was muted. But anyway, Rajiv, take a moment to thank you for joining it today and giving us your thoughts. Really appreciate your time and trying and giving us around a 360-degree perspective around the space.
Thank you so much.
Well, that's the view from SBICaps on the telcos. I hope it helped you get answers to some of your questions pertaining to Jio versus Bharti and that whole telecom puzzle that we're looking at right now. Thanks so much for tuning in.